Sheth, who is the Chief Executive Officer, Institutional Equities at Emkay Global Financial Services. Nirav, thanks so much for taking the time.
Thank you.
Pleasure to have you in studio. I love the jacket, by the way.
Me part too. Of my Friday dressing. Thank you so much.
No, but so the market's looking as spiffy as you are today.
Yeah, so very constructive. I think what was holding us back was essentially the energy prices and the war and stuff like that. I don't know whether they followed the leading economic indicators, right? So we are sort of a Teflon economy. The CV sales, credit growth rate, I think is the highest ever in Modi era, right? That is the biggest leading indicator in terms of what is happening, and it's surprising me. So the auto numbers, the two-wheeler numbers, so we are doing well and the market responds to that. Only thing that keeps me worried is that I think by this time the rupee should have gone back to 92, 93 levels, and looking at inflows of $50, $60 billion, and yet yesterday I think rupee fell. I'm hoping that's more of a noise, but outside that, it's good time.
The argument has been that the RBI took certain measures to limit or mitigate the fall. It created that book, which is essentially going to require some time to be unwound, right?
Of course.
So on the derivative side, there's going to be some action that will take place that will keep it under pressure.
I'm not too worried if you're reflecting to the fact that, they've got a short position of about $106 billion over the next 2 years or something like that. I'm not too worried about that. I think that we are in a world that we can't necessarily comprehend, right? So we are talking about, we've done fairly okay on the macroeconomic side, right? And we have got this incessant outflows on the equities, which is sort of hampering our currency. Look at Japan. That's a current account surplus. South Korea, current account surplus, right? And yet their currencies are down as much as Indian currency is down. We are still running. We've structurally run a current account deficit, right? So, that worries me because a 10% rupee depreciation is eventually 10% inflation.
Sure.
It's just a question of time. Everything gets rebased, right? Import tariffs, your import parity prices and stuff like that. So it's not direct, it's indirect inflation. And that eventually impacts my interest rates, my required rate of return and stuff like that. Let's see. You're in a world where, you don't have answers to everything else. But if I focus on rupee, I believe that countries eventually become rich if they have a strong currency. And we need to push in that direction. And therefore, I think the regulatory authorities, the political establishment needs to be cognizant of the fact that, you need to pursue a strong rupee policy. That is my view. That is when you're going to become rich 10 years, 15 years down the line.
Even at a time, sorry, I'll just add one more question on that point. Even at a time when we're talking about the exporters in the manufacturing space and increasingly in defense, in capital goods, in various other pockets, you want Indian companies now to manufacture for the world. You're saying make in India, right? Even IT, the one ray of hope at this point is that, okay, they get some AI business, but also the export revenue comes through and the dollar appreciation or rupee depreciation aids them.
Well, I think, rupee has lost half of its value in the last 10 years, right? And in the same space, IT margins are down from what they're in 2014, right? So I think it's a policy if you believe that, depreciation of the currency is going to help your exports. You have to look at slightly higher valuation products. I don't think, for example, pharma was never a product of that, right? It was never a product of the fact that, your rupee is going to be lower. Yeah. And now you are 20 years into this, right? Now if you are saying that, and for example, let's argue that you're doing $30 billion of now Apple phone exports, right? That has not happened because of rupee depreciation. That has happened because you've taken the right set of policy measures. Yeah. That is what you want to do.
Good point.
That's true. Okay. Nirav, the one interesting thing that's happening in the last couple of months, if you will, is that there is now an OPRA correcting. One, what does this tell you, part as a policy measure? And two, what's the impact on the multiples of some of these MNC companies which literally had this stranglehold on high quality performance, and that's why they traded at 80, 90, 100 P multiples? Does that come off?
So, do you need access to Chinese technology? Unequivocally, yes. Right? So if you are talking about battery systems, for example, 83% market share. If you are talking renewables, again, 90% market share. Rare earth, you have nothing worth speaking about, right? So you need that. Now the question is that what is the kind of structure you want to create? Do you want to have majority ownership with them? Probably not. Are they okay to work with a minority partnership? We've seen in case of Dixon that a lot of the companies are willing to work with that. So you need to have a gated approach in terms of how to move forward, but that is a way forward. anything that trades at 80-90p, let me tell you, we'll have problems. It's a question of time. Unless and until you can see 40% for the next 8 or 9 years. And in this world, if anyone comes and tells me that you can see 10 years out, I'll be very, very cautious about that. You can't. You are in AI is transformational. I've said this again and again. We have no idea what will happen in the next 10 years, right? And therefore, to say that longevity, I don't buy that.
Okay.
So would the safe choice be just to stay away from IT till we figure things out, despite great valuations right now?
110%.
Stay away.
If I was a fund manager, I'll run a zero weight. I'm very clear.
Zero weight, huh?
Zero weight. Yeah. I think some of them do. I just read yesterday that Helios runs zero weight IT for the last 1.5 to 2 years. Brilliant call. So, I mean, are we going to say that, we're not talking about the fact that, they'll disappear in the next 10 years. Do we even discuss print media? Right? The circulation is still going up. Are we discussing ZTV? Right? And Netflix is just 5 million. So I've been through this process where, 15 years back we talk about India is a different country, vernacular languages, Hindi subscription, people don't know English. Kuch nahi hua. And the companies have grown. Maybe they are flattish in terms of earnings. Your sector gets disrupted. You have no idea. And this is different. This is a different level of disruption. I've read some of the books. It's scary.
So when Alex Karp, the Palantir CEO, comes and says that CEOs are livid with what's happening with AI adoption right now, and it's a token tax, etc., and you see this kind of buoyancy, the questions about the AI trade, you think those are temporary or teething troubles for disruption?
Any technology will have an S-curve, right? So I'm again repeating, I'm differentiating between what is an underlying technology and what are the valuations. We can debate about the valuation. Is SpaceX worth $2 trillion? We can debate that. There's no doubt about it. I'm talking about how profound is the technology. We have never seen anything that is inductive logic. Software, all technology was always deductive. X is equal to Y is equal to Z, therefore X is equal to Z. This is nothing. You don't know how it works, right? So I am a avid user of Claude, and I meet about 8-10 companies a week, right? And my usual process was I call up the associates, I'm building this company, give me a rundown. All I do is I just go to the cloud, I get global view, Indian view, financials, better than what any top ranking associated CA ranker will give it to me.
Are you going to hire less people? Are you going to hire less people as a result?
Yeah, and is there a disruption for the sell side business, Nirav? The buy side will probably think that why do I need sell side research?
I am certainly sure that.
Sorry, you are sell side, that's what I'm asking you.
No. So I'm saying there is to be disruption. So I've got a structure where I've got one lead analyst and 2 associates, and I'm telling my team that now we move to 2 leads and 1 associate. So productivity will multifold. That is the way I'm looking at it. Although there is not so much of buy-in from the team right now, but I have no doubts we are moving towards that.
Wow.
I have no doubts about it. As a practical user.
It's a great insight, because this is one question we ask everyone: what is it doing to your business, and what are you experiencing? Because it's that first-hand insight which helps. Coming back to the markets, we seem to have shrugged off a really bad period for now. Do you think it's reflective in the price already? For Indian markets, the geopolitical headwinds, tariffs is no longer.
At the earnings growth rate of the larger sectors, IT, my view. If you look at banking, it's growing at mid-teens or lower mid-teens, right? So I think we'll end up getting required rate of return, which is 12 or 13%, right? Now, the question is whether the markets will get re-rated, depends upon what happens to the interest rates and therefore what happens to oil. And I'm bearish on oil. So there's a different sector altogether. But I think that over the next few years, the construct of the Nifty has to change. You need to have stocks like Eternal, which will grow at 30% for the next 4 or 5 years. And you'll have a lot of these platform companies making a gateway over there. You'll have a lot of infrastructure companies. Adani Enterprise, for example. I think there's some blowout subscription, stuff like that. Large companies growing in high teens growth rate is what we want, which unfortunately not the case, right? FMCG companies are struggling to go in high single digits, and they're still trading at 50-60p. So that's a no-go area.
So should one just ignore, Nirav, as an investor, you don't have Nifty futures in your portfolio, right? Ignore what the Nifty is doing or will do until the composition changes, a bottom-up portfolio, well constructed, could make money, right?
110%, it will make money, and I'm very constructive that it could be high double digits.
So let's say let's say you are a fund manager now, because you said if you're a fund manager, you're at zero weightage IT. If you were a fund manager, what would be your top 3 weightages right now?
So I'll tell you the way I look at it and what I tell my clients. I'll have, I'll run a barbell strategy. On one side, I'll pick up sectors where I believe can grow at 15-20% for the next 5-7 years, renewables, electrification, platform companies, right? Where I have some comfort with the unit economics. The business model not completely evolved. Misho, Paytm, we discuss this again and again. So these are high growth. There is no doubt about it. The question is whether profits will come or not, right? On another segment of the barbell, I'll say that I'll look at companies that are turning around, they're very cheap, you can have microfinance companies, something like GE Shipping, trading at 10% free cash flow yield. So there are enough ideas where you know that you can't lose money, you're not very sure whether you can make serious money or not, what can cause the re-rating. In between, I have to play with the large scales. I'll figure out, I don't like Reliance, I like Adani Enterprise, I don't like ICICI, I like HDFC Bank. That's a matter of debate. But to me, the alphas will be created from these 2 extreme parts.
Where is the space for utilities and those companies that will give you annuity?
Bullish.
Bullish.
So I think that over a period of time, you will have a replica of what's happening abroad. So are we going to see multiple gigawatts of data center in the country? Unequivocally, yes. There is no doubt about it, right? So, and then you have to figure out, whether they are going to give 16% IRR, 15% IRR, and there'll be a lot of the supply chains that will benefit from this. Certainly, yes, including power. So, let me tell you, this year, that is calendar year 2025, for the first time ever, power generated from renewables globally was higher than what generated from the thermal. 26%.
That's insane.
Great insight.
It has taken over.
Yeah.
Wow.
Where are we in that whole game? Or we need to get there?
We have the capacity. We have the capacity, but generation is not yet there, right?
No, so I'll tell you why I'm asking. On this whole battery energy storage play and solar power play, there is also quite a divided view that have these companies now become overvalued without actually showing what they're doing? Is there a bit of a bubble blowing up, or is this the future that you need to bet on? Just wondering where you are on that.
No, it's a future that you want to bet on. So I think at least if you look at the hardware part, which is let's say solar cells, and then we have wafers and all that. So there's a very, very clear, you've got this ALM model, which talks about the fact that, you can't import China, you have to manufacture, you have to use solar cells, and then you have to use wafers and all. So there are regulatory profits guaranteed, assuming that you can execute.
But that could change.
That could change after 5 years.
We've seen it with power equipment producers this morning.
Yeah, it can change.
It can get tweaked down, is what I'm saying.
It should get tweaked down. I can't give you 25% IRR for a long time in the future, but the bet that I am willing to take is that by that time, the cost of generating power, which is BESS or battery energy system plus renewable, today is about 6.5. It will go to 4.5. Thermal is at 6. And then it takes off on its own, like it has happened globally.
Yeah.
But you need to have the setup in the country.
Interesting.
So these are the ideas that I'm talking about that should be on the right side of the curve.
So actually, therefore, transmission is incredibly important.
Of course.
Your top favorite idea?
They are not there in the offline space. So broadly, when I look at platform companies, I'd like companies that will have very high engagement, which is monthly transacting users, and then obviously don't have too much of competition, right? So very strong. Secondly, my sense is that, and not that VSS has told me, but when you look at his interviews and you see it, he is all in AI. And, he's gone on record saying that, cryptocurrency was a great tech, but he says, I never believed in it. And he says, AI, I'm all in. So let's say where it goes out. And, it's a very well established model. Secondly, I certainly believe it has to happen. MDR on UPI has to come. It is free when you want to penetrate to a certain level, right? So, and it happens with the stock. So there is an optional value to that. And Paytm is because we cover it, but I would be very bullish on Misho. I don't know that company very well. But if you are transacting with some 250 million customers in India, you can't displace that edge. Very, very difficult.
Yeah.
Interesting stories. Nirav, always great to have you come in and share your thoughts. What a fantastic chat.
Yeah, seriously, keep on coming to the studio more
Yeah,
often,
good
whenever
one.
you can.
Thank you. Pleasure to be here.
It's a pleasure to have you.
Nirav Ashar there. All right, we continue the great conversations this morning on NDTV Profit. Aditya Suresh, Managing Director, Head of India Research at Macquarie Capital with us this morning. Aditya.